Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Matt Tuttle, CEO and CIO at Tuttle Capital Management. And we're talking about some interesting ETF areas: European defense, leveraged single stock ETFs, SPACs, as well as UFOs and government grift. Matt, welcome back. Thanks for joining us today.
Thanks for having me.
So we'll talk about all those more interesting areas, but since we have just crossed the halfway mark this year, and for reference, we are recording this on Friday, July 11th. So I wanted to start with your outlook for the second half and where you're putting money to work right now.
Yeah, so we are big believers that you need to be thematic. And we're also noticing that Trump is a perfect market indicator. He's telling you when to buy and he's telling you when to sell. So the other day he tweeted markets at all-time highs. We're going to keep them there. I'm going to be watching his tweets. And as long as he's positive on the market, we want to be in it. And then we want to be focused on all the top themes and, more specifically, themes that him and his administration are in favor of. So one example, he signed an executive order on drones, and then Hegseth came out last night and talked about drones, drone stocks, space, anything AI related in, AI infrastructure, AI power, European self-defense. And whenever possible, we want to gain exposure because of the asymmetrical nature through pre-merger SPACs. So, there's a reason why we have certain ETFs that we do. Being someone who's an active trader, I like to launch ETFs that I want to trade myself.
I like the Trump indicator. So are you launching a Trump indicator ETF anytime soon?
So GRFT, which you mentioned, will have an aspect of that if, we put in the ability to add, levered and inverse ETFs. So, if Trump tweets, hey, this is a great time to buy, we're going to add equity exposure. And if Trump tweets, hey, this economy is Biden's fault, then we're going to take out equity exposure.
Okay, very interesting. So let's talk about European defense stocks now. And you offer an ETF. In fact, this is the only US listed ETF which provides pure exposure to European aerospace and defense stocks. The ticker symbol is EUAD. And this has surged about 77% year to date. And this has 1.1 billion in AUM, of which more than 920 million has come this year itself. So obviously investors have noticed the performance. And in fact, European defense stocks had been rising since the start of the Russia-Ukraine war, but they have soared this year because those nations are ramping up military spending, and that is partly in response to pressure from President Trump. And we know that some of that spending may benefit US defense contractors as well, but most of that will go to European firms. So that is the main reason why this ETF did so well. So tell us a little bit about this ETF and your thoughts now. Do you think this performance can continue?
Yeah. So again, we teach investors something we call the HEAT formula. T stands for themes. And in looking at themes, you obviously want to be invested in, what's going on today, but you also want to try to forecast tomorrow. So one thing that we knew about Trump 2.0 from Trump 1.0 was he was going to go to these NATO countries and say, you guys need to pay your fair share. And what we also could extrapolate from that is, well, if I'm France or England or Germany, do I want to be giving all that money to Lockheed, or do I want to give that to domestic suppliers? Well, it makes sense you give it to more to domestic suppliers. So, we launched this last year because in my mind, this was the perfect Trump-themed trade, and it is played out exactly like that. These stocks are, shifting their paradigm entirely now, because we're going from an environment where the NATO countries didn't spend a lot for their own defense into an environment where they do. So I think it's certainly a strategy that could have more to run. I'm personally a dip buyer. I'd look to buy it, buy more of it on dips. But I think this is a theme you need to be exposed to. I'm not a big fan of Europe. A lot of people say, "Oh, buy Europe instead of the U.S." It's like there's nothing thematic going on in Europe except for European defense. So, that and that's why this is the only European ETF we have.
Now let's talk about single stock leveraged ETFs, which have just exploded in popularity, mainly among thrill-seeking investors this year. And you are one of the pioneers and leaders of this category. In fact, we had you on the show in 2022 when these ETFs first came to market. And now this category has more than 23 billion in assets. And I, as an ETF strategist, I love more tools for investors. And these are great tools, for getting lower cost leverage than they can get through margin or options. But at the same time, investors should remember that these are very sophisticated tools and they are not meant for buy and hold investing. They should be used as short-term trading vehicles only by investors who closely monitor their portfolios. So when you talk to, advisors and traders, what do you tell them about these ETFs, how they should use these ETFs in their portfolios?
Exactly like you just did. And the one word you used, which I love and use all the time, is tools. These are tools. So a lot of times, levered and inverse get, bad name. People write mean articles about them. At the end of the day, I agree 100%. More tools is better. And then it comes down to education. We spend a lot of time. I do a monthly webinar, a daily newsletter, podcasts. We spend a lot of time educating investors about these tools. And, there are very specific use cases where you would want to use these. And, and there are very specific types of investors who should be using them. And, I'm a huge believer more tools are better, out there in the marketplace. And that's exactly what we tell people.
So you mentioned about some of the stories in the media. And I recall reading in the Wall Street Journal, and I think it was around November, they reported that a 25-year-old trader had convinced his parents to let him manage their retirement portfolio. And then he had put 27% of their portfolio in a levered MicroStrategy ETF and the rest in MicroStrategy shares. And we know that the MicroStrategy shares themselves and then leveraged ETFs are among the most volatile products in the ETF market. They can see huge swings. And if people don't time their trades properly, they can lose a ton of money. But if they get lucky, they can also make a lot of money. And this particular ETF was down a lot. Those levered MicroStrategy ETFs, they were down a lot in March this year. So I don't know whether the parents had taken back control of their retirement portfolio or not. But what kind of people, what kind of investors are using these products? And have you seen that they are holding these ETFs for a longer time, or they are just trading and holding them for just a few days?
So, yeah, and you bring up a great point. And the one thing I've noticed is Wall Street is very unkind to the uneducated. And that is why we spend so much time, money, and effort on education. It's why I write a daily newsletter, why I do podcasts, why I do webinars, because I want to educate people. There is no one right answer when it comes to investing, but there are a whole bunch of wrong ones. And, taking a massive chunk of your older parents' retirement portfolio and putting it into 2X micro strategy when you don't know what you're doing probably classifies as a wrong one. Beyond that, these are such useful tools. I think there are so many people doing different things. You can hold on to these for longer than a day, but you need to understand how these work, how the returns work when they compound, so you know exactly what you're getting. I know there are people who are trading them intraday. I know there are people who might hold them for a day. And I know there are people who are holding them for longer. Our hope is that as many of them as possible are, educated on what these products are and how to use them. And, and they provide the result that people are looking for.
I agree with you that education is very important. And if you understand how these products should be used, and also what percentage of your portfolio should be in these risky products, then it is fine. So we know that single stock ETF leverage is currently capped at 2x in the US, whereas in Europe, they have 3x single stock ETPs as well. So are you trying to get the regulators to approve single stock ETFs with higher leverage? Will we see single stock ETFs with higher leverage anytime soon?
So, we have not had conversations with the regulators on this and probably wouldn't. I know the SEC doesn't like them as is. So kind of like, hey, do I want to push my luck? Could I see eventually we do? I could see it. I think the SEC's got a lot on their plate right now with the crypto stuff that I would not expect that anytime soon. And a 3X brings, a lot of challenges from, a market maker, a swap counterparty, and an issuer standpoint, because it's unlikely Tesla is going to go down 51% in a day, but could Tesla go down 33% in a day? Sure. And I think, I don't remember how much it went down that day that Elon tweeted that Trump was in the Epstein files, but that was a pretty rough day for Tesla. So if it's allowed, it's certainly something we're going to look at, but I would not expect that anytime soon. Okay.
So when these ETFs made their debut in the US in 2022, they mainly focused on large cap, mega cap stocks, the most popular ones like Tesla, Nvidia. But lately we have seen many of these ETFs, they are focused on the most volatile names in the market. And then after these products launch, some of these products just take off, and whereas others are largely ignored by traders. So when you decide to launch these levered single stock ETFs, how do you decide which stocks to focus on?
No, not as much that. So, the benefit of being someone who's a trader myself, and, I'm tapped in on Twitter and in some Discords to a lot of the retail trading community. So I see the stocks that they like, the stocks that they're trading. And then you also try to look ahead, because if I file something today, best case scenario, it's out in 3 months. So, all right, I want to know, all right, what's hot today, but what's likely to be hot in 3 months? And, so that's kind of how we're looking at it. And then, then sometimes you get lucky. Like, we did 2X Robinhood, and, all of a sudden, almost every day Robinhood's in the news for some advancement that they're doing, and our 2X Robinhood's up to almost 230 million. So sometimes that'll happen. On the other hand, we did 2X ARM, and that's only got 1.5 million in it. So, it's research, it's understanding what people are trading, trying to look forward, and then there's always a little bit of luck to it.
So now I wanted to talk about SPACs, and they have seen some resurgence in interest lately, and you offer an ETF, the SPAC and new issue ETF, the ticker symbol is SPCX. And according to Bloomberg, the SPAC IPO market is having its busiest year since 2021. Now, we know that after that 2021 boom, there was a bust in the market. So tell us a little bit about the reasons and the resurgence in SPACs lately. And do you think it's going to be different this time?
So I do. 2021, 2022, the post-COVID years, everything got a little bit crazy, and the SPAC market did as well. I mean, when you see, A-Rod and Shaquille O'Neal and, every athlete and entertainer doing a SPAC, it's like, okay, that's that's a bit much. And, and rightfully that bubble burst and SPACs kind of faded into obscurity. What's really brought them back is, kind of the Trump theme that, I keep hammering on here is you've got SPACs that are issued by people in his inner circle, like, Cantor with Howard Lutnick is doing a lot of SPACs. You've got SPACs like Columbier, where Don Jr. is on the board. And then you've got SPACs that are seeking mergers in areas like nuclear and Bitcoin and in different cryptos that Trump is in favor of. And the beauty of the SPAC structure, if I want to buy into one of these themes, when it is a pre-merger SPAC, before the merger is consummated, there is a floor where that SPAC has a certain amount of cash in trust. It's usually $10 or a little bit more than $10 because it's earning interest that I can always get back. So unlike buying a stock that could go to infinity but could also go to zero, when I buy a SPAC, I know exactly what my downside is and my upside is still unlimited. And that makes the SPAC structure extremely attractive from an asymmetrical standpoint. And the A in my heat formula is asymmetry. I love to look for asymmetrical trades where, heads you win a lot and tails you lose a little. And that's what I love about SPAC. So I was doing a webinar yesterday and someone said, hey, Matt, which one of your funds is your favorite? And then whichever one I think is the best investment opportunity at the moment, which right now is SPCX.
That's interesting. Now let's talk about some of your ETFs that haven't come to market yet, but these filings have received a lot of media attention, and particularly the ones about UFO and government grift. So the UFO ETF proposes to invest in reverse engineered alien technology. And the other one, you talked a little bit about the GRFT ETF that aims to capitalize government grift. And I know that you cannot talk about the filings specifically, but I would love to get your thoughts on these themes and why you want to launch these ETFs.
Yeah, so the UFO one goes back to where I think you should always be looking, all right, what are today's themes and what are tomorrow's themes? Something interesting happened in 2017. The New York Times wrote a full-page article about up until then, secret government entity that had videos, and they showed the videos of fighter pilots chasing things that did not obey the laws of physics that we know, and we're not using any type of energy source that we know of. Now, that was interesting. But then Trump comes into office and says, hey, I'm going to release everything we know about Epstein, JFK, RFK, MLK, and UFOs. And we've had, a series of whistleblowers testifying in front of Congress over the past couple of years, all of whom say we are, and by we, I mean some, entity in the US is in possession of technology that is not from this planet. I don't know whether that's true or not. I've got no inside information. But if that is true, and if that technology ever gets released by, say, a president who wants to do disclosure, and it's available for commercial use, that will be the best investment opportunity of my lifetime. That will blow away AI, the internet, space, which I think is a huge area. Imagine, overnight having free energy. All the oil companies go bankrupt, all the utilities go bankrupt, and whoever has this technology and can monetize it is bigger than the Magnificent Seven combined. So I want to be there ready if that ever happens. Again, I don't know whether we have this technology. I don't know whether it'll ever get released. But if it is, there needs to be an ETF for that.
Very interesting. We'll have to leave it there, but we'll definitely keep an eye on those ETFs when they debut. Matt, thank you so much for joining us today. It's always fun chatting with you.
Hey, thanks for having me.
That was Matt Tuttle. Let's recap the ETF tickers that we talked about. The European Defense ETF is the Select STOXX Europe Aerospace and Defense ETF. The ticker symbol is EUAD. The Leveraged MicroStrategy or Strategy ETF is T-Rex 2X Long MSTR ETF, ticker symbol MSTU. Defiance also offers a levered MicroStrategy ETF 2X. The ticker symbol there is MSTX. He mentioned 2X Robinhood ETF. The ticker symbol is ROBN. And we talked about the SPAC ETF. The ticker symbol is SPCX. And the two ETF filings, the proposed ticker symbols are UFOD and GRFT. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.